Good morning, everyone, and Happy New Year, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, the Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com, and today is Tuesday, it's the 4th of January 2022, and I'm just going to bring up our Iris investment warning. I'll keep this on screen for a few moments, and then I'm going to bring up the commentaries disclaimer and the sources. AKD, yes, good morning, Happy New Year to you too, and I wish everyone, obviously, only the very best for the new year. All right, let's just bring up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. And let's go through to our sources, our references, MarketScope 2.0, CNBC.com. We'll start off with the CNBC morning note. And let's just start off with the headline. European markets head for upbeat open as positive momentum continues. And I guess this is the center rally continuing, right? The last week of 2021 into the first 2 days of 2022, supposedly the center rally. All right, let's see what the article says. European stocks are expected to open higher as positive news, as positive New Year momentum continues in global markets. European stocks kicked off 2022 with a bang on Monday, with most regional indexes higher on the first trading day of the new year. There is still much uncertainty around the COVID-19 pandemic. However, with multiple countries around the world reimposing restrictions or lockdowns to stop the spread of the highly contagious Omicron variant, I think I've read this incorrectly. There is still much uncertainty around the COVID-19 pandemic. However, with multiple countries around the world reimposing restrictions or lockdowns to stop the spread of the highly contagious Omicron variant, inflation and monetary policy will keep our key themes for 2022 as investors expect the US Federal Reserve to hike rates in the coming year to help cool the rise in prices for consumers. US stock futures were steady in overnight trade on Monday after the Dow Jones and S&P notched new record closes on the first trading day of 2022. Meanwhile, shares in the Asia Pacific were mixed on Tuesday as data showed accelerating Chinese factory activity growth in December. Investors are keeping an eye on shares of debt-laden China Evergrande Group, which briefly surged more than 6% after resuming trade following a Monday halt before giving up some of those gains. So this Evergrande has been in the news for the last few months now with regards to heavy debt concerns and concerns about missing payments. It announced Tuesday that it saw 443 billion won worth in contracted sales of properties in 2021, a more than 30% plunge from 2020's figure. Data releases include preliminary French inflation, Germany unemployment, and the latest Portuguese consumer. And then just something I saw on the right here. I'm not sure if you guys have been following this Theranos trial. Was quite a scandal, and it's just interesting that there has been a guilty conviction, and some, not all. I think there's 14 charges, and I think 6 came in as guilty. Anyway, so it's a very interesting case. Specifically, just the way the story was broke with the whistleblowers. Anyways, just wanted to mention that. All right, let's go through to the chart. Okay, so this is the daily. I think before we get to the daily, let's go through to the weekly chart here. Hey Peter, yes, let's see. So Peter's asking, are we still in rally mode? Let's see if we can make that assessment. I think that the weekly chart here, we'll look at it on two levels. So we'll come back to the indicators in a moment. Let's just take a look at it in terms of the price action first. So the trend is up. So the way that we determine that is through peak and trough analysis. So the way I've determined the peaks and troughs is a trough, a reference trough here, a reference peak here, and this is a 1 week candle, giving us the higher, the second reference, the higher, the third reference, the higher trough, and then we've now taken this peak out, and we are what looks like an uptrend. I think that the obvious question is, do we have the legs to get above the previous highs? And that's, I think, the next challenge for the bulls. In terms of this candlestick, it's still early days in terms of the week, but it's a remarkable candlestick. You can see there's a gap open here. See, so there's last week's close. This is this week's open. There's a big gap here. It was closed almost immediately, and then we actually ended up very strong. If we go through to our indicators, the key here, I think, Peter, is, well, if we get through to the 80 level, okay, I think that would be a huge positive. Remember, this is a week chart, and if it holds the this 80, then I think there is a real potential for some gains. But we're not there yet. But we have turned bullish in terms of the stochastic, the RSI. And if we go through to our daily chart, I like this chart as well. You can see that we're in zone 1, which is depicted by the upper red, upper blue. And I think for swing traders, this is particularly important because the swings in either the bullish region or the bearish region is, I think, kind of what we try and target. So the neutral area between the two blues, well, I mean, there certainly can be movement there, but that we can't, ignore those. But in my opinion, I think it's easier to trade the outer regions than the inner regions. So again, we're in a nice zone 1 movement here. If we have to apply sort of peak and trough analysis to this, we can do it as follows. We can put in a reference trough here, and then the swing goes all the way up until this point here. So this would be where we put in the reference peak, and then there's a brief 1-day pullback over here. So I'll put in the HT there, and it looks like we're on to the next leg. Okay. So again, the peaks and the way that I've kind of, just to show you how I read the peaks and troughs, we're looking, so for these sort of wide type of trend analysis, these sort of, when we look at multiple candles, we refer to those as peaks and troughs. And then when we're looking at individual candles, we'll refer to highs and lows. So here we've got a series of higher highs and higher lows. So that's a nice swing. This one over here, well, this actually breaks that swing, doesn't it? Because it gives you a lower high, lower low. So that's where the higher trough, and then we get the next swings coming in. So that's just the way that I'm reading it. If anybody's sort of unclear on that, let me know. But it's actually, if you kind of think about it, it's very similar to just peak and trough analysis, just in a much more sort of a much more compacted area. So I like that. And then if we go through to the hourly, okay, so this is terrific. This positioning in terms of the stochastic, as long as it stays in this 80 area, I think there is chance for the DAX to capitalize on a positive momentum. Of course, if it starts dropping below the 80, well, then we could be running out of steam. There could be some exhaustion, profit-taking pullback. If that's the case, I don't think that's a bad thing. I think it's actually a good thing, because what we can do is then we can try and get into a better risk-adjusted entry, sort of maybe at the central pivot, and try and take it up. But that's if the momentum starts to wane. As it stands right now, just before the market opens, you can see that the momentum's strong. We've also got the moving averages showing that angle and separation. So it's quite difficult to, I think, get in here if you never got in when the signals were pulled, because this is a really quite an advanced part of the move. Now, I don't know where this leg is going to end, so we could have something where it is, maybe we've only gone halfway of the swing and we have a really strong day, and that's going to be signaled by the stochastic staying above 80 and above, and if the moving averages keep that angle and separation. So what I'm trying to say is, if you want to get involved in the swing, yes, there is positive momentum there, and the daily is positive. Just understand that it's not the best entry in terms of a risk-adjusted entry, because let me add, in my opinion, because we try get in on the corrections. So this would have been sort of the area to get into, but as long as the momentum's there, the likelihood of an appreciation is probable. So you ask yourself, if I'm going to take this trade, where do I put my stop loss? Because you have to have a stop loss. What's the appropriate amount that I'm willing to risk, so that I have a plausible risk management strategy? And then that's, I guess, the way someone might approach it. The other idea is, well, okay, maybe it will give me a better risk-adjusted entry on a pullback. So let me just see here how it's got questions. Yes, sorry, Howard, I'm only reading your questions now. So Howard's asking this exact question: is it a good time to get into now? It has run. Is it better to wait for a pullback? So I can't give the buy or sell advice. What I can say is that let me bring up the paint here. What I can say, in my experience, the better entries are on the pullbacks. Okay, that's my experience. That's what we've always tried to do on the webinar. We've always tried to get in on the pullbacks. But a day like today, well, the pullbacks come, it's gone. We're kind of over here. So now the question is, well, where is it going to end? None of us know. Okay, so we could be over here. So let's say we're over here, and someone may enter the trade and they may have a terrific payoff. Alternatively, they may get into the trade and it is right at the apex, and then it pulls back. You've caught it right at the wrong time. that is, so this, in my opinion, is the higher risk option. However, I want to be clear, just because it started, I'm not calling for it to end now. It may continue in terms of the way that we prefer the approach in our webinar is to try and get it as early as possible. We don't always do that, obviously. Often we get in, we come to an instrument and it's already moved, and this is the case for the DAX now. Another thing that we can add there, Howard, is remember the first hour is going to be, in my opinion, very foggy. We don't really know the direction of the market, I think, until it settles. So maybe it's worth just giving yourselves a bit of breathing room, see what's happening, and if the momentum's still there, okay, let me try and make a decision off of that. If the momentum starting to wane, okay, let me try and make a decision off of that. Does that help at all, Howard? I hope I haven't been too sort of wishy-washy with that answer. All right. Just one other thing I want to do. I just looked at the US dollar this morning as well. I think I just want to bring the US dollar up because it's also, I think, an important instrument to look at. Just going through to our weekly chart over here. Go to this one. So I'm just looking to see if there's if this is going to be another higher trough here. So I'm looking to see if we get the three conditions here, right? So condition 1 would be the lowest low. Condition 2 we've got, okay, so we've got condition 1, we've got condition 2. Condition 2 is taking out the reference candles high, but without condition 3 we've got nothing, and unfortunately we won't know that until the end of the week. It's only Tuesday, but it's got to close above it's got to close above this upper horizontal. So keep an eye on that. If you take a look at the zones, we have moved out of the weak area into the neutral area. So the dollar does seem to have some support at the beginning of the week. Tomorrow, we're going to get the FOMC minutes. I think that's going to be a catalyst for dollar movement as well. All right. Any questions? Please go ahead and type those through. Just to let you know, I'm going to try and make the US Open this afternoon. So if anybody wants to join in, we'll try to do a scalp there. All right, so I just want to let you guys know. All right, thanks very much, guys. I'll conclude at this point and speak to you a bit later in the day. Thanks very much. Yeah, 4:30. Yeah, 4:30 ZA time, 3:30. Sorry, is it 2:30? I think UK. All right, thanks, guys.